This week's markets have been quite poor. We saw one of the biggest September losses ever at the beginning of the month, and it kind of follows after Nvidia reported impressive results last week, but the stock was weak. Therefore, I believe that discussing Nvidia and your thoughts on the quarter, as well as how it performed in comparison to your expectations, would be a good place to start. Indeed, Tom, I believe that it was the most anticipated earnings we've seen in a decade or even in history. Simply remove the noise from the data and events regarding watch parties and anything else from Nvidia. The Blackwell delay has been resolved. The back and forth on that over the past few months is comparable to what we're seeing in arches across Asia. Demand is 125 times greater than supply, and nothing we observed in terms of metrics or data led me to believe that this is changing. If you look at the quarter's whisper estimates, which range from $33 billion to $33.5 billion, they received $32.5 billion, which is just below whisper, and the stock is negatively impacted. We think there's a good chance that $2 billion beats will occur. However, especially in a quarter like Blackwell's, there is no reason why Jensen and the squad will lead to anything close to that. The demand thesis is rising, yields are improving, and, in my opinion, this eventually prepares the reader for the next part of the story. I understand that when the sell-off occurs, individuals ask themselves, "Oh, is this it? Is this the end of it?" In terms of overall AI, it's the second inning of a 9-inning game. The most crucial takeaway from this call is that for every dollar spent on an Nvidia chip, the multiplier for the remaining technology is $8 to $10. However, Tom, I believe it illustrates that we are living in a time of unprecedented technical advancement. I might refer to it as the fourth industrial revolution, and you might say it's similar to the beginning of the internet. Suddenly, you're not discussing valuation in terms of PE for the upcoming year if you stick to some of these companies and begin charting trajectories. Base case, bull case, where numbers can go. Yes, exactly. These are major plot arcs, after all. A side question is whether you think Apple will produce a car in the coming years, and how big of a market do you think the Vision Pro will have? We think the Apple automobile will be released in 2026, and you might start to see clues about it later this year. We think it will be an OEM agreement, like the one with Foxconn. There may be a V-value Apple version for you. We believe they are in contact with a few automakers. It would resemble a car that was created by Apple. They will likely have one in Asia and one in the United States. We once believed it would arrive in 2025, but now is 2026. For developers, Vision Pro costs $3,500 as of right now. Those might be $1,200 spectacles with 300 applications in 2 years. From Vision Pro to the AI App Store to the Apple automobile, I think this will be Tim Cook's greatest accomplishment in the next 2 to 3 years. Autonomy is going to be important when I discuss the Apple automobile. We predict that 5% of vehicles on the road will be autonomous by the end of the decade. I understand. Fantastic. Someone wants to know more about your opinions on Palantir. As you have stated, you believe it to be among the greatest pure-play AI plays. Yes, and in my opinion, Palantir is institutionally despised. Since their spreadsheets from the 10th story of their Park Avenue office building don't reflect it, they believe it to be hype. We've spoken with hundreds of prospective clients, and Palantir is arguably the greatest pure-play AI platform available. AI is currently expanding into the enterprise sector by utilizing its work in government. This will take time to accomplish. That's like, oh, it didn't happen as expected every quarter. However, we think 2024 will be a significant year of change. Especially if you go back 6 months, I believe the conversion will be astounding, especially though AIP was recently published. This name, in my opinion, will experience a complete re-rating on the business side as opposed to the government side. I don't see any significant large-scale AI deployment where Palantir isn't called upon initially. Palantir is an excellent illustration of how simple it is to become enmeshed in negativity. You must therefore get your hands dirty and spend time with users and consumers. Spreadsheets aren't going to contain it. Seema Modi is aware of those details. Seema, there has been a lot of talk lately regarding utilities outperforming chips so far this year. Is the trade becoming more diversified? Yes, Kelly. Over the past month, there has been a noticeable slowdown in the AI trade. The major companies that specialize in the hardware and software needed to power the hyperscalers with their AI models are Nvidia, AMD, and Broadcom. As you can see, those stocks have dropped by at least 22% from their peak values. High memory bandwidth stocks like Micron, which has down almost 45% from its 52-week peak, and AI server brands like Supermicro, Dell, and HP Enterprise are also seeing pressure. Jordan Klein of Mizuho informed customers that buy-side interest in semiconductor equities had recently waned. Interest in software equities is rising and sentiment is deteriorating. Speaking of software, over the last 2 months, the IGV ETF has fared far better than chips, thanks in part to Adobe, which is scheduled to release its earnings later this week. The sell side remains optimistic about the massive microprocessor company Nvidia. Morgan Stanley maintained its overweight rating today. According to analyst Joseph Moore, worries about gross margins are exaggerated, and the greater risk is macroeconomic, particularly the possible effect on capital expenditures. The market needs clarification on 3 factors, according to Goldman's technology team, in order to really get the generative AI trade back in action. Nvidia's 2026 financials, additional proof that AI models can be made profitable, and that costs can be covered. Men, yes, I believe it to be clear. I don't know where you stand on this, but the hype and promise of artificial intelligence, call it a bubble if you like, has peaked. Now, the main question is whether this is a sideways adjustment or if the more exposed names will see additional changes in the future. Totally. Really good earnings for the next 2 to 3 years have already been discounted after all. Nvidia made it very clear that the Blackwell chip must function as intended. Production is encountering problems, and demand is still an issue. Double ordering has been the most interesting development in semiconductors for years. Did Google, Apple, and Meta place extra orders in case they didn't receive what they needed? Will they all suddenly back off and decide, oh, we don't really need these, and you start hearing about chips being overstocked in China and other places, you know something is wrong. Yes, you own Nvidia, and it's an amazing chip. However, I believe you need to use it sparingly. It has fulfilled every request we made of it. The next stage of growth is now desperately needed. Perhaps some funds must be released. It has already dropped 20% from its highest point. It's down more than 30%, I believe. Yes, it cost more than $130. The stock fell 50% in 2022. These equities must be a part of your portfolio, but they should not be your only holding. Possessing it is acceptable. Are you saying not to own it? Is the only question people ask. I'm not saying that, though. However, because a lot of things are already priced in, Nvidia may see a sharp decline while the rest of the market may see an increase. Of course, the original meaning and length are preserved while the grammatical errors are fixed in this version.